Hey everyone, me Kevin here. In this video, I'm going to explain why I'm so freaking bullish on Tesla that I have now 14,000 shares of Tesla. 47% of my portfolio is in Tesla. I've got a few scenarios here I want to run through with you, and you're gonna see, okay, that's how we're coming up with a potential valuation for Tesla. Because right now, when you look at Tesla with traditional means, it feels overvalued. It feels pricey. But it's very difficult to value Tesla at today's metrics, or matrices, I don't even know if that's a word. But anyway, because what are we waiting for? We're waiting for batteries. We're waiting for chips. We're waiting for factory capacity. We're in a phase of hurry up and wait, right? That is unfortunate because it does slow down growth, but it is a blessing because it lets me keep buying into Tesla cheaper and cheaper as people don't realize the long run potential of Tesla. And look, I could be wrong, I'm just some dude on the internet, but I am so bullish on Tesla and I'm so excited to share some of these numbers with you. So I'm gonna keep this simple. We're gonna go through my bull case, my base case, what Wall Street's consensus estimate is and how that compares. And then we're gonna do a gigawatt comparison, and that's gonna be special, gigawatt. Okay, so the easiest way to do this is just start with production ramp rate. And so this is my projection for the Tesla ramp rate for how many vehicles they can deliver. In 2020, we delivered approximately 500,000 vehicles. I think that's going to go up to 950,000 in 2021. When Giga Berlin, Austin, Fremont, and Shanghai are at full capacity, each of these facilities will be able or fully capable of producing 1 million vehicles each. That means by 2024, we should have a marker of 4 million vehicles. If we produce or create 2 more facilities by 2025 and we start scaling those, I believe we could get to 6 million in 2025, or at least to 7.2 million by 2026, and so on, all the way up to my bullish thesis of 16 million cars by 2030. Now that's crazy because how does that compare to the rest of the world? Well, look at this. Toyota in 2020 delivered 14.3% of the world's market share, or of the world's vehicles delivered, which of 74 million vehicles delivered, Toyota delivered about 10.6 million vehicles. So saying that Tesla might deliver 16 million vehicles in 2030 is assuming that Tesla beats Toyota's market share. It's a very, very, very bullish. And remember, this is the bull thesis, so we're going to go to the more like nuanced theses in just a moment and kind of see what Tesla's projections might be as well. But if we go with a bullish thesis here of 16 million cars by 2030, and the easiest way to assume robotaxi revenue, full self-driving revenue, is, in my opinion, just to lump this into the car's revenue, because otherwise we're making way too many projections over how robotaxi is going to be monetized and full self-driving. So I'm going to say $42,000 per vehicle, fully monetizing autonomy. So if it's a $200,000 semi, or a $20,000 car that Tesla ends up selling, I think the average selling price is going to be around $42,000 in my bullish thesis. This is then simple math. We multiply to get revenues. We have generally around 2.7 to 3% of cars that get leased at Tesla. We get services that are usually around 10%. I'm bumping that to 12% in my bullish thesis here. There's going to be a limitation or a risk factor for batteries, obviously, for this expansion. But my bullish thesis is Tesla easily getting to over $130 billion in energy revenue, solar, batteries, solar roofs, mega packs, endless opportunities for Tesla. And so I think Tesla's energy division will be 20+% of their car division in 2030. Insurance. Elon Musk thinks insurance could be as much as 25% of the value of the company. I'm going with 15% of the value of revenue of vehicles. I'm worried this might be a little bit too bullish. So we'll see, and obviously the further you project out, the more risky things get. Now, I'm including semis, robotaxi, full self-driving again in vehicle revenue. We'll talk about consensus estimates in a moment, not so important right now. But in my opinion, that brings Tesla to, and this, who knows, I mean, this could be 2030, I don't know, I don't think it's going to be 2029. Maybe it ends up being 2032, but this is coming, in my opinion. $1 trillion revenue for Tesla. If Tesla hits $1 trillion in revenue and we get to not even as bullish as Elon is with his margin, but we get to a 28% margin or an expense margin of 72% on vehicles, we could end up using regular margins that we see for some of these other items and 10% in operating expenses, which might end up being a little bit high. We would end up getting to a profit for Tesla of somewhere around $86 billion. Take out about 20% for taxes. Even if Biden jacks this up to 28%, we'll still have credits and loopholes and ways of lowering our effective tax rate, depreciation, and so on. I would expect an average tax rate of around 20%. That would leave us a net income of around $68.7 billion, divided by shares outstanding currently. Obviously, that is going to increase in the future. So that is something to keep in mind, is there will be more shares outstanding in the future. So we'll see how that ramps up. But if we just use the shares outstanding that we have today, we'll get to about an earnings per share of around $61 with a price today at $700. This means we're only pricing Tesla at about 11 times forward earnings in 2030. The dollars we're paying today is 11 times forward earnings. And if Tesla ends up with a PE ratio of 100 in the future, it may not. 100 is really growth dependent. I mean, we would still have to be growing like crazy. Like if we go over here to get a 100 PE ratio, we would barely have to be starting to see that curve of the S curve. And what I mean by that, like, is if we put in, let's say, 17 million right here, see, we start getting that S curve, that flattening. If we start getting that, 100's gonna start being a little bit rich. So this could be a little bullish, but I am very bullish on Tesla, okay? So I'm being transparent about my bias here. But anyway, in that case, at 61 times earning, or at $61 in earnings per share, we could be somewhere around a $6,000 price in 2030 for Tesla, which if you invested today at $700 would be an approximately 24.2% annual compounded rate of return. That's every year. If you buy today at $700, if this is true, every year you'd be printing pennies of about 24% on this stock, which is pretty freaking incredible. So this is a bullish thesis, and I realize this is very bullish, so I have to sort of dampen my expectations a little bit, and therefore I have a base case scenario. My base case scenario, basically what I do is I assume Tesla only gets to 15% market share by 2030. And I also, because of that, scale down their energy and insurance revenues and their leases and the others. I keep margin largely the same, and everything else pretty much the same, except I only use 70 times earnings in the future. So we have a lower EPS of $45, and I project out at 70 times in the future to get to about $3,200 per share at a future value in 2030, which would give me an annual compounded rate of return of 16.44%. But let's see how my projections here compare to Wall Street projections, because keep in mind, my crazy bull thesis for Tesla gives Tesla a market cap of almost $7 trillion. I know that sounds insane, but then again, I'm also the dude who has 47% of their money in Tesla stock. So I better be freaking bullish. So yeah, $6,000 price target, $7,000 or $7 trillion market cap. Either I've lost my mind or I'm gonna be close. And even if I shoot for the moon and miss a little bit, I'm still gonna have some beautiful tundies coming out of the oven, okay? But anyway, so my base case scenario just lowers their penetration worldwide, but it's still bullish, 15%. That's still more than Toyota's doing today. All right, let's look at what Wall Street is projecting. Wall Street is projecting, I backwards engineered this a little bit, so let me start with what they thought with, or started with. Wall Street is projecting a consensus estimate of $389 billion in total revenues for 2030. And then they start tapering off after 2030. They actually think Tesla revenues will start declining at 31, 32, and you won't see growth anymore, you'll actually see shrinkage. And nobody likes to see shrinkage, nobody. But anyway, if we kind of reverse engineer how we could get to this consensus, which by the way, Wall Street estimates range from about $250 billion in revenue in 2030 up to $600 billion in 2030. So at $1 trillion in revenue, in my bull thesis, I'm pretty high. I'm potentially a little overly bullish. In my base case scenario, I'm also high. I put them at $754 billion, but that's because I think Wall Street misunderstands Tesla, and I don't agree with other people's estimates. So anyway, if we go with Wall Street's numbers, so this is Wall Street's consensus estimate, and we give them a 70 times earnings multiple in the future, this would be about a $1,700 stock, which if you buy it today at $700 gives you about a 9.24% return. You could probably, if this ended up being true, you could probably do better elsewhere. You know, start with a smaller company. But I want to know what Tesla's thinking. So in order to know what Tesla's thinking is, I want to do some gigawatt math. Gigawatt! But before we talk about gigawatts, I have to quickly mention that if you want to buy a Tesla or get Tesla solar panels, go to mettkevin.com/Tesla. You'll get some referral bonus points. Obviously, I'll get a little thank you as well, but you'll get money off power walls, mileage on cars. So check that out in terms of free charging. So check that out via the link down below. And of course, make sure to get yourself 2 totally free stocks with Webull. Go to mettkevin.com/Webull, deposit $100, and you get 2 free stocks worth up to $1,850, which you could then sell and buy Tesla stock with. Okay, so let's go to gigawatts. So gigawatt projections actually come directly from Tesla's battery day. And Elon Musk thinks that Tesla is going to produce 3 terawatts of power batteries, which batteries is the threshold for everything at Tesla. If I put in an Elon discount, which basically means I don't believe that Elon's going to get to 3 terawatts, and I take off 20%, and they only get to 2.4 terawatts or 2,400 gigawatts, then they will have 2.4 billion kilowatts of energy in battery packs. If I give the energy division half that, and we sell those energy products at $70 per kilowatt hour in 2030, which I think is likely, maybe it'll even go down to $50, we'll see. That's only about $84 billion of energy revenue, which is actually less bullish than I am in my bull and base case. In both of them, it's less bullish. So this is important to keep in mind because this could be Tesla's projection here, right, regarding gigawatts. And it depends on how much money we get per kilowatt. If this is $90, obviously it looks a lot more beautiful. If the cars get the other half and we put about an 85 kilowatt hour on average pack in each car, some cars are going to be 30, 40, some smaller cars, inexpensive city cars in like China and India, some like the semi-truck are going to be, you know, 400 kilowatt hour packs, right? Anyway, if we do that, we've got about 14 million cars, which lines up with it's kind of between my bull and base case, right? My bull is 16, my base is 12 million cars in 2030. With gigawatts here, half going to energy and half going to cars, we're at 14 million cars for battery capacity to be able to produce. And then if we just skip all the other stuff, everything else being consistent, we also use a 70 times earnings multiplier, not 100 times like in my bull case, because that means we're starting to see that S curve and we're not going to see those bullish projections again, which that 70 could even be high, okay? So there are risks in this. Anyway, that would give us an EPS of about 44, which means a reasonable price for Tesla could be just over $3,000 in 2030, which actually aligns roughly with my base case projection. So my base case projection is a price of $3,200 for Tesla. Based on Tesla's numbers, we should also be at about $3,000 per share in 2030, which would give you a return on your money of about 16.03% compounded every single year for the next 10 years. If you buy it at $700 per share. Now, yes, I realize I am very highly bullish on Tesla, so consider the risk factors, battery technology, expanding factories, competition, what's Lucid going to do, what's NIO going to do. Those are all very real concerns. But if you like the way that I do my fundamental analysis, I take a little bit of a different approach to fundamental analysis. I don't like using discounted cash flow on these high growth companies because it becomes a little bit more complicated, but this is kind of doing a discounted cash flow in reverse. It's accomplishing the same thing, in my opinion, in a more intuitive way. So anyway, if you like the way I do fundamental analysis, consider my program down below on stocks and the psychology of money, and you'll learn exactly how I do fundamental analysis. Thank you very much for watching. Hopefully you appreciated this breakdown of my Tesla projections, and folks, we'll see you in the next one.